A quarter of developing countries are poorer today than they were before the COVID-19 pandemic, and this is according to the World Bank. Many low-income nations, particularly in sub-Saharan Africa, have suffered a prolonged economic shock over the 6 years to the end of last year. Now, countries such as Botswana, Namibia, Chad, Mozambique and the Central African Republic have seen average incomes fall, while larger economies like South Africa and Nigeria have failed to raise per capita incomes despite modest growth last year. The bank says that recent growth has not been strong enough to reverse the earlier losses. The World Bank says that global economic growth has downshifted since the pandemic and is now too weak to reduce extreme poverty or create enough jobs. Global growth is projected to ease from 2.7% this year to 2.6% in 2026. Growth in emerging and developing economies is expected to slow from 4.2% last year to around 4% next year. Now, while the US economy has proved more resilient, with growth upgraded to just over 2%, the euro area remains a laggard, expanding at around 1%. And West Bank warns that wars, famines and policy failures have delayed recovery in many fragile states. Chief economist Intermit Gill has said that avoidable policy mistakes, rising debt and weak investment are holding back growth. China is expected to grow just above 4% over the next 2 years, its slowest pace in 35 years, weighed down by trade pressures, an aging population and a property slowdown. The World Bank cautions that without reforms to boost private investment, trade and productivity, the global economy risks slowing down, higher debt and rising joblessness in the years ahead.